Well, the latest news from the energy industry is in, and it's not good. First quarter earnings are down for at least 5 of the major oil and gas companies. Notably, Phillips 66 earnings shrunk by 37%, ExxonMobil's fell by 46%, while Shell took the biggest plunge, down by 56%. Now here in Oklahoma, Chesapeake Energy's profits dropped by 19% from the first of the year. Continental Resources posted a 42% loss in their first quarter, while Sandridge earnings were down by 51% from this time last year. Tough times, that has Oklahoma's Independent Petroleum Association warning of a recession similar to that of 2008 and 2009, which many believe will be reflected in the latest unemployment numbers released later this month. Earlier, I visited with ChadWilkerson of the Federal Reserve Bank about energy industry profits and the effect they could have on our larger economy. So, Chad, can the current state of the energy industry be described as finding a new normal with diminished expectations?
I think that may be a fair characterization. Prices have come down a lot, and some international factors, OPEC in particular, seems content with them staying lower for a bit longer. So I think firms are beginning to recognize that and take some actions to be successful in a somewhat lower price environment.
And I think we should note here before we move on to the larger economy is we have seen a fairly historic realignment of where we get our energy, with more of it coming here in the middle of the country.
That's right. We've seen a huge increase in oil production in the United States. We're now the biggest oil producer. And all of the growth in world oil production for the last 4 years has come from the United States, and more specifically from the part of the United States between the Mississippi River and the Rocky Mountains. So right here in our region. So we are less dependent on foreign oil than we have been in a long time.
Looking back over our economy, does this current downturn, does it remind you of anything that we've seen before?
It does. We actually did a piece at the Fed a couple months ago in our Oklahoma Economist publication comparing this oil price downturn to previous ones in Oklahoma. And there actually have been 6 other downturns of prices significantly like this one since 1980. But in looking at different aspects of those different downturns, one sticks out as the most similar to the current case, and that's the downturn of 1985-86, which I think worries some Oklahomans a bit. And why it's similar, one reason is it occurred outside the context of a U.S. recession, so it wasn't because U.S. demand was falling. It was driven more by a decision by OPEC to not cut their production when prices fall, and they've actually stuck to that. That's been a surprise, just like it was back in 1985. And then another similarity is that prices weren't rising before the downturn. Most times when oil prices fall sharply, they had just risen in the 6 to 12 months before that. That wasn't the case this time. The things that are different, though, from 1985-86, one key one for Oklahoma is that unemployment back in 1985 was already well over 7%. So workers that lost their jobs then didn't really have many other opportunities. Today, Oklahoma's unemployment rate is under 4%. So some workers who have been laid off, I know personally, have already found jobs in other industries. The key unknown as to whether and how much this will look like 1985-86 is how long prices stay low. That was the big problem then, is that they fell and then stayed low for a long time.
Is it fair to expect for the people that may have lost jobs that we will see our unemployment rate rise here in the state?
I think that almost certainly will occur, and I think one leading indicator of that we're already seeing is that new claims for unemployment insurance have jumped since February. So the last couple of months they've been running about 30% higher than they were a year ago. So almost certainly that will result in Oklahoma's unemployment rate rising by several tenths in the next month or two, actually.
Now, to the casual observer, our economy, at least to me, feels different than in the mid-'80s. Is that correct?
It is. Another couple of differences that I didn't mention earlier. One is how the energy sector is financed. Back in the 1980s, a lot of the lending was by small banks and to small firms. The sector now is much bigger, I think more sophisticated, the energy sector itself, and how it acquires funds is different. It's much more from capital markets, private equity, large banks. That doesn't necessarily make it less risky, but it makes it less potentially damaging to Oklahoma communities that had many banks very heavily involved in oil and gas lending back in the 80s.
You know, the pain that the energy industry is feeling right now, could that be beneficial to other sectors of our economy?
It could to some degree.
In terms of workforce?
In terms of workforce, definitely. We've heard for the last 4 or 5 years now reports from manufacturers, construction firms, services firms looking for IT workers, could not find the workers that they needed, and would sometimes blame the energy companies who were able to pay more than they were. So I already know anecdotally, personally, several folks who've been laid off from energy companies and have found work at other firms that need their skills and have been needing them. So again, that's perhaps a silver lining that wasn't there in the 1980s because our unemployment rate is so low. Now that said, the energy sector is so large and so high paying in the state that as jobs are cut, those workers, if they do not find reemployment, that's lost income for the state. And we're already seeing industries such as manufacturing, construction, beginning to see some slowing in retail sales as a result of lost energy jobs. So there's both positives, but also some negatives.
In knowing what you know from the things that pass across your desk, what are some of your best forecasts as we move forward through 2015?
For the energy sector?
For the energy sector and for our overall economy, if you would. Yeah.
Well, for the energy sector, prices have come up a good amount in the last month or so, oil prices. That's been driven by, I think, some reduced concerns in the Middle East, although there's been the unrest in Yemen lately. It has also been driven by how rapidly firms cut rigs in the U.S. and therefore production would start to slow. We're just beginning to see that. As I mentioned, the flows into Cushing have just begun to slow in just the last couple of weeks. So as that supply falls and if demand stays where it is, then prices should continue to increase. Now, one factor that might keep them from increasing too much and perhaps even dip again is many of the wells that have been drilled over the past 6 to 9 months have not been completed, so the oil is still in the ground, and it wouldn't take much for that oil to flow again once prices rise. So once prices get up to a break-even level, or maybe slightly above, those wells might be completed and increase supply and keep prices from rising much in the near future. So that, I think, will likely keep a damper on certainly growth in the energy sector the rest of this year, and there probably is more declines to come. And that will make it, I think, difficult for Oklahoma as a whole to grow economically in 2015. And then beyond that, what happens with oil prices depends on a lot of things, most of them out of our control. What happens with OPEC, how content they are with keeping prices low, how strong the world economy grows, in particular places like China and India that have been growing very fast and have seen slightly lower growth and thus lower demand for petroleum. And then also how efficient the energy sector becomes itself. If it continues to make these efficiency gains, it may be able to be a profitable growing industry at lower oil prices than we would have thought a year or two ago.
Will the gradual resurgence we're seeing in the national economy, will it help here in the state?
It should. Definitely we're seeing, late last year at least, we saw very strong growth in the U.S. economy. The first quarter GDP numbers for this year were somewhat weak, but there were several, I think, temporary special factors holding that down. Weather this year again was colder than normal, especially in highly populated parts of the country. There was the port disruption on the West Coast that slowed shipments, slowed sales. There should be some rebound from that. And then also somewhat related to the oil issue is that the lower gasoline prices you would have thought would have spurred consumer spending. We have not yet really seen that, and we have seen an increase in the personal savings rate. So it seems like most Americans have saved much of their gasoline savings from the past 3 to 6 months. But that money is there to spend in the future. They may just be cautious about how lasting that windfall will be. But if it becomes clear that it's going to be lasting, that could provide a boost to spending in the U.S. and then also to Oklahomans who have also been benefiting from lower gasoline prices.
You really can't say Federal Reserve Bank without thinking about interest rates, and there's been lots of talk, and really the past year and a half, that these historically low interest rates we're seeing could be on the rise, but we've yet to see it. What do you think the future holds for us?
Well, I always have to be a little careful in talking about rates as a Fed official, but the Fed has been more, I think, transparent about that than we used to be. And the members of the committee, the Federal Open Market Committee that decides those things, each quarter now releases their own forecast for the federal funds rate, the overnight rate that the Fed controls, for the next several years. And in the last projections made in the first quarter, 15 of the 17 members of the committee thought that interest rates would start to rise sometime in 2015. I think there's a good amount of debate about when and how fast, but pretty close to a consensus that rates will start to rise sometime this year. And the U.S. economy appears to be growing at a rate that may be able to absorb that. And inflation also appears to be at a level to be able to absorb that.
Well, I'll leave you with the question that I always ask you. If you're riding up in an elevator with someone and they ask you, so what's going to happen with our economy? So what's going to happen with our economy?
I think Oklahoma is going to go through a bit of a tough patch, or at least a slow patch here in 2015, because the energy sector has gotten so large and so high paying, and the layoffs are relatively sizable. That's difficult for us to fully absorb in the short run. But like I said, I think firms are becoming more efficient. I think we have good opportunities in the state, still low unemployment, and I think can be positioned well for the future.
All right. Chad Wilkerson, thank you so much.
My pleasure. Thank you.